Good evening, everybody. This is Johnny Seville from Acorn Wealth, and this is your executive summary for stock setups for Friday. Now, we have one day left, of course, in the open range, and what a week it has been. Amazing. Just for a quick recap for all of you following along to some of our recent alerts. Last week, we sent you an alert for Apple for their an options during earnings play. We alerted you to the 102 April 29th puts, which were $1 at the time. Now, we had a beautiful gap down on Apple yesterday where we alerted our subscribers to that would be the exit point, basically. We had predicted a $95 to $96 target on Apple last week, and it hit perfectly. I think the options went from $1 to about $5.90, as high as $6.40 during early trading hours. So beautiful 500, 600% return if you're in on that. So yay if you were. What else? Of course, another one. This one we sent out to you just a couple of weeks ago, B-Core. We had a target of this just above $7. I believe it was $7.20, I think, from memory. Anyway, we alerted this way back here, as it just started to pop through down here at $5 and just rallied away. So beautiful move here of about 50% plus. So B-Core, big win as well for anyone who was playing along in that one. And we love to see those, and we love to see people making money. The idea of sell in May and go away is not the case this year, as we start to look at what is forming to be a very, very interesting market. If we have a look at the S&P 500, I spoke last week on Tuesday, April 19th. If you got that executive summary, you can go back and have a look at it. What I said to people in that recording is that I anticipated that the market would rally up because it was breaking through this channel, and that it was going to rally up, create a possible head and shoulders around this 2120 area, and then break down, consolidate sideways, bouncing along this open range level here we see at 2080, and then start completing the rest of the head and shoulders. So far, that's exactly what we've seen. So what this could mean is a breakdown to the 2060 area. So the next two candles could kind of be consolidatory with a downward bias. We'll come down, tap into this 2056, 2060 area, rally back up, maybe have an intraday high next week around the 2100 level. Of course, open range resets on Monday, so very, very important day. And then our target after we hit, if and when we hit that 2100, will then be a 100-point decline to 2000, and that could be the beginning of a further decline to 1900 and lower. It should be a very, very interesting market. If you're not a full-blown subscriber of Acorn Wealth's Executive Summary Service, make sure you take a trial of it for $9. The link is in the email, because this is going to be a market well worth being on top of. Of course, let's have a look at some of the other things on the move. Netflix, one of our recent alerts, if it broke down through 95, has been performing beautifully. That continues to drop down now almost to the $90 level. Let's have a look at Smuckers, SJM. Also one of the put plays that we discussed as it got up to the 127 level. That's holding underneath resistance well. ZUMZ, which I loaded up on puts on just the other week when we alerted this, that's performing awesome. It hasn't had any lift from the market at all, and it just keeps on trailing underneath this trend line, which makes it a very solid stock when you see it swimming against the trend when the market, in fact, is going up. So let's have a look at one other. ANF, Abercrombie & Fitch, seems to be losing its clothing as it drops, underneath the 2750 level. This is beautiful. It just came up in an upward channel, which is a bearish pattern, upward consolidation, broke down, and then who's your daddy? That one keeps dropping. The money flow is very divergent here, and I expect Abercrombie & Fitch will continue to perform, and I really like the looks of that one. So that's the current shorts. B-Core we've talked about. Let's talk about another one of the longs, though, Heckler Beauty. We alerted this back at $2.80. We talked about the $3.50 January 2017 calls. They're up now from 30-40 cents when we alerted it to about $1.50 apparently today. It hit our first target here around 425. Target was 427, hit a high of 425 though today, so basically up to that target area. I expect some consolidation. You can see that the pattern here was again an upward channel. And if you look at the measurement here, so there's the upward channel, and we duplicate that, you can see we have reached that high. So we have technically hit the first sell point. We could expect maybe a pullback to around this kind of 380, 393 area. We'll see what happens. Obviously, would not want to see this break down below this horizontal support. Hopefully this upward channel continues stronger, and that it's more of a pennant with a continuation than an upward channel, but only time will tell. So that's something that we'll just watch. Strath, our fundamentalist, believes this will be a $6, $10, $12 stock by the end of the year. So on the long-term side, he's holding. On the short-term side, it has reached that technical sell point. So we'll wait for a pullback to see where it goes from there. But on the fundamental side, it is still a longer-term long that we like. Another one that hit its target yesterday, EGL. We alerted this back at $14 back in February, and it's just been a beautiful, slow and steady mover that hit its target yesterday there at 20. I think it was 2050 or 2053. But yeah, hit a high of 2070 yesterday. Boom, and there you go. So in terms of the market, looks like it's going to go lower. In terms of a long hedge, Deer I like from this $84 level up to a target of around 89. So we've got about a nice kind of $6, $7 pop. Excuse me, I should say $5, $6 pop potential. And then possibly higher. There's a lot of accumulation going on. If you have a look at the soybeans ETF, there's a lot of activity happening in the agricultural industry, and the buy versus sell ratio of insiders getting into agricultural and industrial machinery is high. And of course, nothing runs like a Deer. So Deer and Company could be a nice long as a hedge against the short side of the market. Looking at the short side of the market, I have a few for you tonight. There's FCH, Felcourt Lodging Trust, which is a hotel motel REIT, and I like this because if it breaks down below this this resistance, you can see that there's kind of everything holding it there. You got the horizontal line. We got all the moving averages already on top, the 200 on top, the 5, the 9, the 20, the 50 are all on top. And if it breaks this last little level, there's nothing that I can see that will stop it from moving down to 657 and possibly lower down to 607. So that's what I'm looking at. A breakdown of below 727, first target of 657, second target of 607, and I'm looking at a stop loss criteria at 765. That's on Frank Charlie Hotel, or Foxtrot Charlie Hotel to be correct. TROV, Trov, again looks like a ascending head and shoulders pattern that's breaking down. Money flow is significantly negative. On TROV, I'm looking for a break below 397. I'm looking for first target of 357, second target of 307, where we get down to this kind of extension of the head and shoulders. So we see a $2 drop here. So another $2 brings us down to $3. And if we have a look back, you can see that $3 is also a significant support area. So it all kind of ties in. So with a secondary target of 307, that's the juicy trade. And I'd be looking at a stop loss of 417. Now, these guys do report earnings on May 5th after market, as reported by FinViz. So I'd be looking at the June or July $5 puts, which are $1 and $1.20 is their last traded price. That might be a little bit higher tomorrow when the market opens if we see negativity as we saw today. So, but yeah, the June or July $5 puts, $1 or $1.20 is what I'm looking at there. Goodyear Tire. I mean, these guys look like a massive longer-term head and shoulders pattern, as you can see here in the chart. A bit messier because you can see it kind of created this double top before hitting the neckline. Then put the head and shoulder in, the head in, came down and created kind of another second touch here on the resistance and is now dropping. So on these ones, I'm looking for a break of 29.41, and I'm looking at 26.90 as the first target. But the big target, I think, is a longer-term play, is looking at the 21.33 target, which is the head and shoulder extension. And with that, I'd also associate a 30.77 stop, so $30.77 stop. And what I really like is the October 28 puts. So the October $28 puts are currently, last transaction price is $1.05. So good implied volatility under 30%. And or for a shorter term play, I look at the July $30 in the money puts, which are last traded at $1.30. Okay, and we'll have a look at JD. This one is basically a play that you can see here. I mean, I look at the volume down on 51 million shares on Tuesday, up on 22 million on Wednesday, up today only on 12 million. So the volume's halving every day and looking very toppy, closing in the bottom of the range. So I like this as a long from where it's currently at. I put a stop loss above the high of today's candle, which is 26.30. So I'd look at, say, 26.37, and I'd be looking at a target down here of just below the low here. What's the low? 22.45. So look at, say, 22.57 as a target. Okay, and there you have it. For those of you who are big on options, I'll give you one other one. It's a stock trade. First data. This is purely technical on the trade here. I'm looking for a breakdown below. Well, basically, where are we here? Yeah, looking for $12 down to $10.53 is the target, and I'd be looking at a stop loss above the high of today's candle. So looking at $12.57. So it's great. We've got 50 cents roughly of risk, $1.50 roughly of reward. So there's 3 to 1. So it ticks the box from that sense. Now, a couple of announcements next week for those of you who are purchasers of the Perfect Storm series or Capturing the Crash. We will be having our live lesson next week on Wednesday, which will where we'll be teaching you the scans on how to capture this crash and how to scan for the highest probability shorts, which is next week, Wednesday, 5 p.m. Pacific, 8 p.m. Eastern. If you're not a member of that and are interested, email us at info@acornwealthcorp.com. It's going to be a great session where we're going to be teaching for about an hour and a half, 2 hours on how to scan for the very, very best trades with one click of a button. That's how I find all of these. So it takes me next to no time at all compared to what most people are spending. So that's next Wednesday at 8 p.m. Eastern. And give us an email if you'd like to be involved in that and aren't already enrolled. If you have already purchased that course and you've watched the on-demand sessions, you will automatically get the invite to that in your email. And of course, if you do want to be trialing these types of videos every day, send us, go to the link down at the bottom of the screen or the link in the email that you've followed to get here, and give us a try for $9. I'm sure you'll find it's worth it. In the meantime, happy trading and good night.